Kiwis might remember Air New Zealand's flirtation with Australian airline Virgin, which ended when the company's then chief executive, Christopher Luxon, reportedly fell out with the Virgin CEO. That was around 8 years ago, and Virgin has had a rocky history since then, eventually going into administration in 2020 before being purchased by Bain Capital. An IPO was planned, but those talks went quiet, and now we know why. Qatar Airways is reportedly set to take a 20% stake.
I mean, the company has had a fairly turbulent existence, you'd have to say, since it was founded in the early 2000s by Richard Branson, the Virgin chief. I mean, they did have some early luck. Ansett Airlines failed, and so that meant that Virgin was in a duopoly with Qantas for some time. But there's been a lot of shareholders that have shuffled through the company. Richard Branson, then he got Steve Doring company Patrick involved, Air New Zealand, of course, and Luxon. He sold out at a loss in 2016. I think Air New Zealand lost more than $100 million on their investment there. We've had Singapore Airlines, two Chinese airlines. The company was listed on the ASX for a while. And so, as you said, they went into administration in 2020 with debts of nearly 7 billion Australian dollars. And then they were bought by private equity, Bain Capital, soon after that, for about 3.5 billion, I think. So under Bain, they recently turned their first profit in 11 years, obviously being fattened up for an IPO, but it's been on again and off again, and largely off again because of the state of the IPO markets since then.
So you just laid out a whole bunch of airline shareholders who haven't had much success with this. Why does the deal make sense for Qatar?
I didn't actually mention Etihad. They were also a shareholder there. And talking Middle Eastern airlines, yeah, Qatar Airways are interested again. Look, it does make sense for Qatar, more so than for many other airlines. They're already code-share partners with Virgin. They've got a strong commitment to Australia. They're a very visible presence as one of the main sponsors of the Sydney Swans AFL team. That was complicated, of course, by the strip search scandal in 2022 at Qatar Airport. But the main thing is that Qatar's been trying to get into Australia to get more international flights, and that has been knocked back several times by the Australian government, which at the same time opened the door wide for Turkish Airlines. So it's just a question of speculation as to why the government has knocked back Qatar. But getting involved with Virgin would be a sign of how serious they are about the Australian market, and they'd probably get some synergies in domestic and international travel. And I'm sure they're hoping it might make the government look a bit more favourably at their request for international flights.
Where would it leave the float of Virgin, though?
Well, I think it would be good for the float, Hamish, because it had set a benchmark for the price to start with and give investors some confidence that the company now had a strong international strategic partner rather than institutional shareholders. But my main point would be, is 20% shareholding for Qatar enough? I mean, is there enough interest for the market for the rest of 80% in a float, which would be, well over $1 billion they'd be hoping for? So are Bain going to be selling down in stages? Are they going to remain a strategic shareholder in it? I mean, I wonder whether Bain are hoping that Qatar would take more than 20%, because that would be a good result for Bain. It'd be a good result for the float, because that would create some price tension. Because selling 80% of the company in the current market, even though the market has been starved of IPOs, would be a fairly tall order, because the Australian market investors do remember that we've had a litany of failures of second airlines. I mean, only just recently we've had Bonza Airlines go bust. And there's another one, Rex, which is trying to take on Qantas, and they're struggling as well.
What would be the broader impact as well of this deal on the Australian aviation industry?
Well, look, it'd be great for competition. I mean, sadly, Qantas rule the roost. We have really, they say it's a competitive market, but it's largely a monopoly. Qantas and Jetstar have the bulk of the market, and they dictate so much of what goes on in the Australian aviation industry. As I said, the industry is littered with failures. Rex is struggling at the moment. So a strong competitor backed by a big international player with a commitment to Australia and with some international sort of flight connections would be a good thing for, it'd be a good thing for the aviation industry. It'd be a good thing for travellers. It'd be a good thing for the ASX, which would get a listing, and it'd be probably a good thing for investors. But obviously the Foreign Investment Review Board needs to approve this, and they're independent of the government, so it's you can't tell really which way it's going to go. But But that's really the only, if Qatar do come forward with this bid, that's the only questionable factor, whether the FIRB would approve it or whether they might rule that it was against the national interest.
MBR is offering a special July-only deal, $399 for a year's subscription. So you'll be able to find me on mbr.co.nz.